Good morning, everyone. Welcome back to the class Investment and Portfolio Management. This week is the third week of course Investment and Portfolio Management. There are two main topics of week 3. The first topic as shown on the PowerPoint 3.1, that is the financial markets. And the second topic is the financial security as shown in the PowerPoint set 3.2. What I expect from students after we completed the topics of financial markets. I expect students can identify the types of financial market as the first learning objective. The second learning objective I expect from you is to explain the differences between primary and secondary market. The last learning objective of these topics is to describe the various types of financial market. The content of which we will discuss today are first, financial markets. Second, primary market. Third, secondary market. Fourth, money market. Fifth, bond market. Sixth, stock market. And seven, derivative markets. Well, what is financial market? What do you think? Here you are. What is financial market? Financial market here are platform or systems where buyer and seller trade financial instruments. The other word of financial instrument is the financial security, such as government bond, corporate bonds, stock, currency, and derivatives. The keywords of financial market are here as the first bullet point, that is platforms or system. We then move to the primary market as the second topic here. The primary market. What is the primary market? What do you think? What is the primary market? Here, I share you the idea of what is a primary market. The primary market is a financial market where new securities are issued or launched or offered and sold to investors for the first time. It's the market where companies, governments, or other entities raise capital or money by issuing new bond, new stock, or other financial instrument directly to investor. The keyword of primary market as the last bullet point on this page, that is the for the first time. What are the purpose or the objective of primary market? The main purpose of primary market is to let the issuer to raise money or to raise capital. Who are issuer in these cases? The issuer probably are government or private company to raise money or to raise capital by issuing new security. In this case, the security may be bond or may be stock equity. The second purpose of primary market is to facilitate the new issuers to who never launched any bond, any stock equity in the market in order to let the issuer to enter the capital markets. And the And to facilitate investor enable invest in the bond and or stock equity of new issuer. Here from this diagram from the slide number 11, please notice that the corporates on your left hand side want to raise money or capitals, right? These corporate go to the banks who are the facilitator to launch or to issue bond or stock equity. The bank then sells the bond and or stock equity of that corporate to investor. The investor may be an institutional investor or maybe individual investor. When investor, please notice that on your right hand side, when the investor buy the bond or stock equity of these corporates, this they invest their money by paying to the bank. The bank then transfer the money to these corporates. The corporates then spend this capital or money in their businesses. The business may spend this money in order to expand their business or to buy new equipment or to buy new factory or to buy any lands. We then move to the secondary market. What is secondary market? What do you think? Here you are. I share you the idea of what is the secondary market. The secondary market is a financial market where investors buy and sell previously issued security such as bond, stock, and other financial instruments. It differs from the primary market where security are issued for the first time, right? In the primary market, the security are issued for the first time directly by the company or government to raise the fund, to raise the money, to raise the capital. But in the secondary market, play an important role in providing liquidity, enabling investors to trade these bond or these stock equity after they have been initially sold. For your more understanding, I provide you the example of the secondary market here on the slide number 15. Right, I would like to provide you the example of secondary markets here. You probably familiar with the secondary market like New York Stock Exchange, Nasdaq, London Stock Exchange, Shanghai Stock Exchange, as well as the Stock Exchange of Thailand, SET. These names are the secondary market that investors can buy and sell the common stock on these markets. What is the main purpose of secondary market? The purpose of secondary market is to provide liquidity for investor for buying or selling the stock, as well as to facilitate investors to trade their security. On the slide number 17, please notice the diagram of the secondary market. From the diagram of the secondary market, please notice that investor A on your left-hand side want to buy stock that currently trade in the secondary market. At the same time, investor B on your right-hand side want to sell stock. Investor A contact their broker, that is the broker A, to buy the stock. At the same time, investor B contact their broker, that is the broker B, to sell the stock. Then broker A send the buying order to the stock exchange. At the same time, broker B send the selling order to the stock exchange. The stock exchange will match the buying and selling order. We already complete the part of the primary market and secondary market. Then we will move on the money market. Here, what do you think? What is the money market? On the slide number 20, I provide you the idea of the money market. What is the money market here? The money market is a segment of the financial market where short-term, right? I mentioned that the only for the short-term borrowing and lending and trading of financial instrument with high liquidity and short-term and short maturity occur here. The characteristic of short-term security that are traded in the money market. Firstly, the first characteristic of the short-term security. The keyword of short-term security, right? Short-term means less than 1 year. The main characteristic of short-term debt or short-term security is the time to mature or the maturity date is less than 1 year. That is the key characteristic of the short-term security. This short-term security provide high liquidity as the second characteristic, right? The second important characteristic of the short-term security. For example of the short-term security here is the Treasury bill or T-bills. We move to the bond market. What is the bond market? Here you are. The bond market is the medium to long-term debt security that are traded in the bond market. For example, 10-year government bonds or 5 years corporate bonds are traded in the bond market. For example of bond market is like a Thai Bond Market Association or Thai BMA. For example, the Thai bond market in Thailand, that is the Thai BMA. For example, here, government bond, state enterprise bond, and corporate bonds are traded in Thai BMA. For example of debt security are PTT bonds, CPO bonds. The characteristic of bond at this time on the slide number 25. That is the characteristic of bond. The main characteristic of bond are the time to mature are more than 1 year. For example, 10-year government bond, 5-year PTT bonds. That is the debt security that trade in the bond market. We move to the stock market, that is the stock equity or the stock exchange. I would love to share you the idea of the stock market in terms of the platform, and I would love to introduce you to familiar with the word of a bull market and a bear market. What do you think? What is the stock market? Here, the stock market, right, is the platform, right? Is the platform where the stock equity are traded by investor. Stock market, again, I repeat again that the stock market is a platform where stock equity are traded by investor. And for the technical term with which I would love to introduce to you is a bull market. What is a bull market? Here, the bull market is happen when the prices of securities such as stock or bond are rising. On the opposite side of the bull market is the bear market. What is the bear market? What do you think? Here, a bear market is happened when the prices of security are falling or are expected to fall. Here that is the bear market. On the slide number 31, I provide you the example of the stock market. That is the stock market in the New York Stock Exchange. The main index are Dow Jones Industrial Average and New York Stock Exchange Composite Index. For example of stocks which are traded in this market are, for example, Walmart, Coca-Cola. Here, get back to the Thailand, right? Get back to the Thailand. In Thailand, the stock exchange of Thailand are the stock market here. The main index are, for example, set index, SET, right? Set index, set 50 index, set 100 index. The example right? The example of the stock I show you here on the slide number 33. I show you the example stock market indexes that are Dow Jones Industrial Average, S&P 500, which track 500 of the largest company listed on the U.S. exchange. Nasdaq include technology stock that trade in US. For the last market that I would love to introduce to you, that is the derivative markets. What is derivative market? What do you think? On the slide number 36, I share you the idea that what is derivative market. The derivative market is financial markets where derivative instruments are traded. Derivatives are financial contracts which the value is derived from the value of an underlying asset. What are examples of the underlying asset? Such as bonds, stock, commodities, or interest rate. This is the example of the underlying asset of the derivative security. The purpose of the derivative instrument are for hedging and speculating. This market play an important role in managing risks and speculation. For example, the main derivative instruments are futures and options. Here on the slide number 36, that's all the financial market that I would love to share you.